25% holding in Rising Pharmaceuticals in USA, which we have divested in December to HIG-led the partner with a $45 billion company which has taken the full stake of Rising Pharma from all the stakeholders. They are 60% now, and we have residuals after getting cash of 40.5 million plus 15 million worth of shares are allotted in the new company, which is equal to 7% of the value on that, and that has been done in December itself. And that I want to update you on that part of it. And then I think things are moving well, and we may not have the crystal ball for the whole year, but as of now for the next 6 months, it looks good, and run rate will be closer to the same thing as of the quarter 3, and I hope also to maintain the profitability also. But at the same time, there are some caveats like unavailability of raw materials, which can derail our progress. That's only bothersome thing. In addition to the increase in the raw material cost, which is okay, which we can take some heat on that, but non-availability itself will derail some of the progress we think we will have. With this, I think I'll stop at this, and I'll wait for the questions to be answered.
Shall we begin the Q&A session?
Yes.
Okay, sir. Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah. Hi, Mr. Dasi. Congratulations on a very good set of numbers. So firstly, I want to understand a few things on the strategic M&As that we have been taking, right? So in 2019, when we acquired Rising Pharma, I believe the Casper Pharma, which is what we have mentioned in our, that we are looking to buy a formulation facility from them. Casper Pharma was the buyer in that transaction, right? And then in the recent HIG buyout, I believe they have bought Casper Pharma along with Rising Pharma to make a combined entity in which we have 7% stake. And this Casper Pharma, I believe, is somehow related or is the same company to Cronus Pharma, which is what Aurobindo Pharma was trying to buy last year, which they terminated, which is into animal health products. So can you help me understand the bigger picture, what we are trying to accomplish over here?
Yes, as is rightly said, the HIG partners has bought both the Rising Pharma and Casper Pharma businesses, and as I said, we are also 7% in the residual partner in the new company. And this Casper Pharma India is not part of the deal. During the discussions, HIG said, since I'm a minority partner and since I'm in India, it is better instead of we running the business, because it's not being a part of it, it is people from Vimal Kambur and all these people, they are having this stake in this one. They said it is better you take it over and run it, because Casper India has a existing contract with Rising Pharma to do all the products that are developed in the Rising Pharma R&D in the manufacture and supply on a profit share basis to Rising Pharma. It's a long-term contract is existing. So what we are based on that now, we have taken our board permission to take the in principle approval. Now we are handing it over to the legal and financial diligence to arrive at the costing. And because this facility is in SEZ in Hyderabad Airport, and it is in a 13-acre site, and it is already filed 6 ANDAs and waiting for the FDA approval. So all the other products that are under development and the rising R&D will be exclusively manufactured as pro forma and supplied to the rising on a profit share basis. So that is the rationale where we are interested in it, and it is being a minority partner there is a benefit there also. They want a sustainable and creditable people to run this place on a commitment basis. That's why we are evaluating this. If the price is good and valuation is good, then only we will go forward on that. That's why we have entrusted this to a Big Five firm in the financial diligence and a legal firm also. So this is the status.
Right. So, sir, I believe this plant has 3 lines. One is the general injectable, one is the special injectable, and there's another oral drug. So we are acquiring all this, the entire facility with all the 3 lines, or we're acquiring just the oral drugs formulation part?
This Casper Pharma is only as of now built for 1.2 billion capacity for solid oral dose forms like capsules and tablets. And it has a plan to do in the future the liquids also, but no injectables.
No injectables. Okay. And so another thing, like in the last phase of our capex, we had built a formulation facility for the formulation business that we are trying to scale up, right? But till now, we haven't really scaled up that business well. So what's the rationale of acquiring another formulation facility? Can't we do this business from the same facility that we have?
No, our expansion does not go. The projects which we have which are going to mature soon, but to take all these new projects, it will not be sufficient. And also, this is an existing facility, and coming with many number of products and long-term contracts, unlike where we are building and looking for a maturity of the product or a partner and all that stuff, right? That's the difference. Here is a long-term contract ready to go into the operations, and the future potential with new R&D projects arising out of the R&D exclusively manufactured here. All these things are the rationale where we have been working on.
Right. So the contours of this business would be dilutive to our existing business model?
Which one, sir?
The new long-term contracts that we will have based on Casper Pharma, will this be dilutive in terms of margins profile?
Oh yes, the formulations, whatever the the tech transfer projects, whatever the normal the profit sharing basis which is there, it will be the same thing, and it's already existing contract which we are doing. Which we have seen it, but we are now giving it for the diligence, and based on that we will go.
Right. Okay, so I have few more questions. I'll just get back in touch.
Thank you.
Thank you. A reminder to the participants, please restrict your questions to 3 per participant. Time permitting, you may return to the queue for your follow-up questions. Our next question is from Abdul Qadir Puranwala from Elara Capital. Please go ahead.
Yeah, hi sir. Congrats on good set of numbers. So just the first question, follow up on what the previous participant was asking. So you said they have filed 6 ANDAs and none of them are commercialized. So are we just looking for the plant, or what could be the sales opportunity in terms of what is currently been filed and what is under development?
As I said, it's none of them approved since because the FDA inspection has not taken place. It's a brand new facility. So we are evaluating all those aspects, but it is the long-term prospects are what we are looking for here. And only after the FDA inspection only, then this will go into the commercial opportunity, isn't it? So that's what the rationale and that process.
Yeah. So what my question was basically on the ANDAs which they would have filed. So what would be the branded sales of the product, what they filed the generic in the US?
We just has taken an in-principle approval. We have not gone through the things. The diligence is going on. Then things will come out, and based on that, we'll be able to know. And based on that, more or less, it is a asset value only we are going to pay. That's what it is, not the business, because business will take time to come into, because the FDA has to come and then the approval has to come and all those things. So if it is within the asset value, and what we get out of it is it's a ready to go plant, FDA approval plant with existing people, with existing contracts, and if I have to start all again, because our facility which we have created in Pashamylaram will take care of only 300 to 400 million only, but not 1.2 billion. So that's one thing. These new products that are coming in, future products that are coming with long-term existing contracts, these are the things that are interested us. That's why we are going ahead. Finally, we are going to pay for the asset only, not for the business. There is no business as of today. I want to make it clear.
Got it, sir. Got it. And so just one more on on the capex, 600 crore capex plan, what we had announced in the earlier quarters, does that remain intact, or because we are doing some expansion at Pashamylaram, so are we still going ahead with that expansion if we acquire this facility, or that plan largely remains intact?
No, that expansion is over. No, last time it's over. The 600 capex is for the new things. So one for the Suryapet replacement block, R&D relocation, and one additional block in Pashamylaram, which we have not started yet. We will be starting soon.
Yeah. So my question was with regards to that one new block only. So if we are doing this or pursuing this acquisition, would we still have to expand the Pashamylaram block?
Oh yeah, I think you are misunderstanding. What we are acquiring is a formulation facility. What we are saying in Pashamylaram is a CRAN side of the block, intermediate block. That's different, and this is different. So that will continue. The capex which you have earmarked is there. It will continue. The new opportunity that has come because of this divestiture, and because they want to divest these Indian operations to people who can run, and they start. It is a partner is the right thing, and we are taking 100% of the thing. No partners will be there. It's an asset-based purchase will be there.
Okay. Got it. And just final question, sir, on the CDMO pharma run rate for the quarter. You posted close to 266 crores of the top line. So just wanted to understand or have some color as to what led to this kind of a top line. And you mentioned that you have a 6 months visibility, but if you could just throw some further, some more color on this run rate what we've achieved in this quarter.
Yeah, there is one new commercialization that has happened, and also the traction on the other products also good in the both commercial and the basic grants also. And as I was telling in my earlier comment, things are moving in the same direction maybe for the next 6 months also. So things are better now.
Okay, got it. So, sir, how many molecules would we have under phase 3 now?
We have 5 in the commercial and 5 in the phase 3.
Got it, sir. All right, sir. Thank you so much for answering my questions.
Thank you.
Thank you. Next question is from the line of Purvi Shah from Kotak. Please go ahead. Purvi Shah, your line is unmuted. Please go ahead with the question.
Looks like Purvi is not connected.
Yes, as there is no source of line with the current participant, we'll move to the next participant. That's Saravanan from Unifi Capital. Please go ahead.
Yeah, thanks for taking my question. Congrats on a good set of results. So last year, you had communicated that there are one specialty chemical and one pharma intermediate would go commercial. So with this, in this quarter, I presume that even the pharma intermediate has gone commercial. So we have commercialized 2 opportunities in this financial year. Is that the right understanding?
Yeah, last year, early part, we have commercialized the agro side of the business, and last quarter, we commercialized the CRAM side of the business. Yes.
Okay. And you have communicated that another 5 projects are phase 3 as of now.
Yes, sir.
Okay. And in terms of ANDAs, first off, we had filed 5 new ANDAs. And anything we have done in the Q3, and also how many we have launched so far?
I mean, so far we have filed 17 ANDAs together and approved 9. As of last quarter, 7 are launched, and 2 more approved will be launched sometime in the next 3 months.
Okay, great. And I have one bookkeeping question to Mr. Sundar. The sale stake in Rising Pharma, has it been accounted in this quarter? So that, is it getting reflected in the other income?
Well, the Rising Pharma will not be consolidated as a part of their income in the equity method, which we have been doing it on a quarterly basis. So that will not be there because our stake has come down to only 7%. What is disinvested, the actual money, what is received, that is already there in the consolidated account.
Yeah. So what is getting reflected? See, earlier we had 2 line items. There is the P&L from associate company, and we had a normal other income. So this quarter we are seeing unusually high other income. Is it because of the passing of the investment sale entry?
Correct. That's right.
Okay. Fine. Thank you.
Thanks.
Thank you. The next question is from the line of Ankit from Oculus Capital. Please go ahead.
Thanks for the opportunity, sir, and congrats on the great set of numbers. So my question was, in a recent interview, we heard that your raw material pricing that is not passed on to the customer if there is any rise in raw materials. So in this environment, when most of the commodity chemicals and all the other chemicals have gone up so much, how are we able to maintain such a good margin when the raw material price is not passed on? And also wanted to know, what is the duration of an average contract that we have for our customers? When do they get renewed, and how does it happen?
One thing you have to understand, there is no contract, period. In the sense, when you are doing a product which is in the clinical trial, there is nothing like a contract. Only it moves, it passes that clinical trial, goes to the next level, only then you get the repeat order. So they cannot give a guaranteed contract, something like that. The duration, as you were saying, by the time we take up the project and deliver, it may be anywhere between 6 months to 1 year. So that means it's the developmental aspects also would be taken care of, and also manufacturing and supply also have to be taken care of, unless these are the phase 1, phase 2 compounds. Phase 3, of course, anyway, that is already R&D part will not be there because it's only a scale up and manufacturing and supply. With respect to the passing on the material costs, see, these are all campaign-based products. It's a small volume, high value-based products. And unlike generic, it's not every month you deliver. As I said, it can take 6 months to 12 months. When the order comes in, we already place the orders. Some of the raw materials, like solvents, we may not place immediately, but the critical raw materials we place up front. There may not be that much increase in the cost. But when it comes to the, as you rightly said, when it comes to the solvents, certainly it will hit us. But at the same time, we cannot pass on because we agreed upon 6 months ago. Only thing this can be passed on when we have a repeat order after success of this molecule at the clinical trial, and based on the raw material cost at that time compared to the original raw material cost, that time we can put a new pricing on it. But I also said that in case of agrochemicals which are on a regular basis we supply, because there is a possibility, not a possibility, there we are able to pass on some of the cost, not the total cost. There we could do something like that. But on the CRAMS side, we could not pass on. Only when the repeat business comes in, then we increase the price. But with respect to the how do you manage the, it is your product mix. It keeps changing. Tomorrow I may be able to do the same volume. If my value-added products are not there, then my margins may be less. So you cannot take one quarter and just say that. But in general, we are maintaining it. Over the year, we are maintaining it plus 40%. That's what I have given the guidance. But recently, we have achieved 45 plus also. And we still feel that it will remain at the same level, around 45 in that range.
Okay, so the margins that we expect for the longer term is 45%.
Right.
Oh, perfect. Thanks. And so just one last question. This Suven Pharma that we sold, when we were accounting for its income, it looks like almost 50 crores per annum we were earning from this associate. And it was sold for somewhere around $55 million, including the stake that we have received in the company. So that is almost 400 crores value. So looks like it was sold for 8 times earnings. Any reason for this valuation?
What do you mean by any reason for the valuation?
I mean it looks a bit low. The 55 crores we were earning per annum, it was sold for 400 crores. Was it because of the nature of the business that it was more of a generic business?
Yeah, you yourself said that, because one quarter may be more, one quarter may be less, and these generic businesses will not, 1 year it may be blockbuster, 1 year it may not be on an average. But at the same time, we have gone there because it's the biggest partner coming into the picture who has other operations also which he can integrate and bring the business more business. We are looking for more business opportunities rather than making in a sale. It's not a pure sale, no. We are still in there. And as you could see, by buying one of the assets which they have not bought it during this process, which we are now trying to buy it at the asset value only. So we didn't get the high dollars from there, but we're not going to pay high dollars for the asset we're going to purchase. It's actually a long-term perspective. You cannot go one-on-one and just to make in a year and a half time, 10 times, you cannot do that. And you want to look for the long-term prospects. That's the way we have to be.
Got it. Makes sense. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, we would like to remind our participants to please restrict their questions to 3 per participant. Time permitting, you may return to the queue for your follow-up questions, as we have several participants in the queue waiting for their turn. The next question is from the line of Rahul Picha from Multi-Act PMS. Please go ahead.
Yeah, thanks for the opportunity and congratulations for very good numbers this quarter. So, sir, firstly, your commentary on visibility for the coming quarters seems very strong now relative to what it was until last quarter. So, you have already spoken about the pharma CRAMS segment. Can you also talk a bit about the specialty chemical segment? Is there any increased visibility there? Because earlier we were kind of expecting 10% growth this year in that segment, and in the 9-month period itself, we have grown 7% over the entire FY21 number. So if you can just speak a bit about that.
Yeah, I don't see much growth more than what I have promised last time, what I have told last time on the agro side. But on the CRAMS side, the traction is much better, and for the next 2 quarters at least. That's what the guidance has up today.
Okay, so you expect the CRAMS revenue run rate to continue while in the specialty chemical segment, on an annualized basis, we might do what we had earlier guided. Is that correct?
Yes, sir. Yes, sir.
Okay. And sir, my second question is on the stake that we have received in the new company. What is the outlook on that? Do we plan to hold it, or we intend to monetize it in the near term?
No, because the purpose is to get the long-term value creation while you get your money back. That's what the whole purpose is, right? While we get your money back with some profits, right? And this is a conglomerate, a $45 billion company which has 2 or 3 other pharmaceutical operations also under their belt, and they are going to take this next level. In that process, we are going to get, we hope that we'll get more opportunities because they grow better because, these PE funds, they expect growth, no? So similarly, with their growth, being a part of it, we would like to get a better growth prospect. So at this time, no, unless there is a value creation is there, maybe 3-4 years from now, we may think about it.
Okay, understood. And sir, for FY23, are you in a position to give any guidance for FY23, like what could be the revenue growth expectation?
I mentioned in my earlier comment that I cannot give more than 6 months. Today, tomorrow, or yesterday, same thing. It will remain the same. Our business model is such that my customer does not have the visibility because it's all clinical trial-based, outcome-based results. So it's very difficult for us to tell. This is max I can tell. 6 months.
Got it. Thanks.
Thank you very much. Next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Hello. Yeah. Sir, any molecule of us going into the commercialization stage, sir, and what impact it could have on top and bottom line in short term, sir?
No, see, I think you have to understand, what we get is the sale price only. It has nothing to do with the commercialized, the brand value, because we are supplying the intermediates. And intermediates, nowadays the API cost in the brand thing itself is less than 2-3%. And out of that, even it may be $2 or $3 billion value, it doesn't mean that we get a lot of it. So what you see is that year you will get a good amount of growth and sustaining that for the following years based on how the molecule performs in the market itself. But you cannot, what kind of intermediate we are doing, early stage intermediate, later stage intermediate, regulatory intermediate has various components. So just because it is commercialized, the only opportunity is, unlike in the earlier base plants where phase 1 fails, you go to the next level, so it's a 0 to 1. But in commercialized thing, you expect to get maybe if you sell 10 kilos this year, tomorrow you may get 20 kilos or 50 kilos or 5 kilos. Something will be there. That's the only difference. Other than that, not much difference.
Okay, sir. And you were planning for the succession, sir, and professionalization the company, sir. Any development on that front, sir?
Not yet. We are still working on it because COVID has stopped many of the activities, including the relocation of the people and all that stuff. So we are on the process. I hope you are not sick of me talking to you.
No, sir, you have put up it's a fantastic achievement for anybody in one's lifetime. And starting out with 1995 IPOs and so much of time you have spent to the company, and we are grateful for that, sir. Thank you.
Sure. No, but we are in the result.
Yeah.
Working out.
Yeah. Thank you.
Does that answer your questions, Mr. Gautam? Thank you. Our next question is from the line of Gokul Maheshwari from Hyper Capital. Please go ahead.
Yeah, thank you for the opportunity. So just one, is there any update on the phase 3 molecules moving ahead?
No update as of now. We did not get any intimation from the customer. Still there in the process. So.
And the timeline for this would be another 6 months or so?
Highly impossible to tell, sir, because it's only the results that will tell us and how fast they can give us the guidance. Because if they need it, they will tell us. I mean, minimum it takes 6 months. But as of now, nothing is there in the pipeline, which any customer told me that you should be prepared to for the next supply. So it may come tomorrow.
Would we be ready in terms of capitalizing on it, in terms of capacity and our ability to deliver?
Oh yeah, those things we never had any problem, because even when they go for the next level also, we have time, at least 6 months time to do that. It's only instead of doing the campaign basis, we'll be doing the continuous basis on the same thing. And if there is any balancing equipment is needed, that can be done within a couple of months. And because the volumes are not going to be like generic with hundreds of tons to be done. That's what it is.
Okay, fine. And just wanted to clarify again on the Casper potential acquisition of the plant. Is this going to be dilutive or not dilutive to your current business in terms of margins?
Margins, see, generics will have a different profile of the margins. And we are talking about one side, everybody is expected the top line growth also now. For that, this kind of an organic thing also, we need to look into it, which is an opportunity that has popped up certainly. Otherwise, this is whatever formulations what we are doing is a leveraging exercise, and it has lesser margins compared to the clients. But at the same time, this being a profit sharing model, I think the margins, when eventually when it commercializes, I think it will come to the same level. But it has its gestation and timelines.
Okay, makes sense. And just last question, this is more to Sundar sir. What would be the if you can quantify the profit on sale amount in the other income which was there in this quarter?
No, this
profit on sale of investments on rising.
Other income has got different components, right? It is not just what is basically what we have total. There are about 55 crores worth of the quantum of the sales net of the tax that is being considered. That is part of this.
Okay, great. Thank you so much.
Yeah.
Thank you. Next question is from Darshit Shah from Nirvana Capital. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on such a great set of numbers in this kind of environment. So my question pertains to this pharma cancer which is commercialized, and I assume it's a COVID drug which we were earlier alluding in our earlier calls. Sir, is the understanding correct?
What is it again?
This is a COVID drug, that's what we supply in the commercial.
Yes. Yes, that is what it is. Yes.
Yeah, exactly. Sir, so my question is that, sir, the innovator is quite upbeat on this particular drug, and they have firm government contracts as well as what they are eyeing, and we are reading is that probably they are planning to make 100 million plus of the courses of that particular drug by the end of calendar year 2022. So, sir, this seems to be a real big opportunity from what the innovator is talking. Sir, how do we sense this, and what's your view on that?
Your thing is too optimistic. That's all I can tell. You have to understand one thing. When we are talking a drug which is going through the phases of clinical trials and gets to the marketing authorization, there the number of players that are available for the innovator is 2 or 3 or 4. But when a pandemic comes in, and when they have to scale up on everything, they go after 10 to 15 different people. Okay, so you don't get, unlike in a regular drug where we're going only 3 or 4 suppliers for the same intermediate in a regular non-pandemic drug. But a pandemic drug, it can be what do you call, the opportunity is also maybe 1 or 2 years only, and also not necessarily you will get the whole part of it, 20-30% of it, because they need to have this in a jiffy. So they will have all their sources, and also no restriction on this, because you could see they also are giving you compulsory licensing to other countries also. So they source this material from so many sources. So yes, we have an opportunity and we keep supplying. Will be one of the things, but at the same time, they don't give everything to the people, and that you have to understand. Don't think just because it is so much business they are doing it. I think we have a bigger opportunity. Yes, we have a good opportunity, but you can't think that in a gigantic numbers. But it is a continuing opportunity.
Correct. That I understand. Obviously, sir, they will be sourcing it from multiple players. So from the sheer number of courses they are saying, it's a huge number that's coming up. Anyway, sir, and sir, do we kind of supply intermediate for both the antiviral drugs use that API? Since you're earlier using some product where we were supplying to intermediate for that particular drug.
So I supply one intermediate for the new drug.
Novel. Okay, so that's for the novel API which they are making that.
Yes. You know that I'm always in the novel things, not in the general things.
Yeah, correct. Great, sir, and sir, all the best for this opportunity, sir. Yeah. Thanks.
Thank you. The next question is from Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question. I joined a bit late, so if you have already explained it, I'm not sure. So just I wanted to understand the transaction rate rising. So two things I wanted clarity, that after sale of 25% stake there, the Rise will continue to market our pharma business?
It's only the stake sale. The business remains the same. No changes in the business. The contracts, whatever it is, the existing products, everything will remain the same.
So
the shareholding is reduced. I mean, we got a new shareholding in a new company, but by divesting the existing shareholding, where we got our money back plus the residual share of 7% in the new company.
Okay. And the 15% stake you have taken in that region, what benefit actually that will give in terms of revenue or profit?
What's it again?
The 15% stake which you have taken in a region.
15%. Where is 15%?
15%.
We have 25% stake in Rising Pharma Holdings. And the Rising Pharma Holdings, along with Transfer Pharma USA, was sold to HAG Partners, called Raising Aggregator Company. And that's a new company where we have received $41 million in cash, $15.8 million worth of shares in the new company. So it's 7%, equivalent, not 15%, 7% of the new company. And we have the contracts in place as it is, the business runs. And also we have a new opportunity to acquire a new place where they have contracts, long-term contracts, which we can take advantage of. That's what it is.
Okay. And so how accounting treatment in this quarter has been done? So how much profit we have in this payment in this quarter?
Yes. There is a profit element, whatever the cash realization on which capital gain we made, that is accounted for as the other income. It is part of that. It is 55 crores net of tax has been included here. And apart from that, the new stake, whatever is there, 15.8 million, will be continued to show in the Rising in the Suven Pharma link books as further investment in Rising Aggregator LP. That is the one where we have a stake of 7%. The accounting treatment will be the new stake will be there. The old stake, to the extent whatever the realized capital gain, that is realized in the form of cash there. It is there in the consolidated account.
The realized capital gain is $5 million?
It is about 55.41 crores net of taxes in India.
Okay. And for the new company we are going to acquire, there is Capper. What kind of investment will be making this entity?
We are going to one company.
No, that will be known only after the diligence.
Okay. And any any timeline when this company may start giving revenue to us?
Hopefully in a month and a half time.
We need to complete the legal due diligence, financial due diligence, and also the valuation exercise. Then the decision will be taken.
Okay. And the last one.
Sorry to interrupt, but may we please request you to return to the queue as we have several participants waiting in the queue for the turn.
Sure.
Thank you. Next question is from the line of Cinderella Carl